trading at its best.
So let me go ahead and talk about what we're going to be doing here today. Okay, first off, for those of you, if this is the first time into one of these webinars, we do them pretty much every Friday. Sometimes we move it to Mondays, but it's usually every Friday at 2 p.m. Eastern. And we post the topic on the blog, and then we get into the detail in the webinar. So for those of you that don't know who I am, I'm Mike Swanson. You've probably heard me in the videos from Momentix and some of our videos over the years. And today is a really important topic. I know a lot of you have, probably some of you here today have even emailed us about this, is, what's the best brokerage to trade with? And it's a really important thing to figure out, because you could have all of your trading figured out, you'd have a great system or a robot or whatever it is, and your broker can break it all. So this is something you've got to make sure that you're confident about, that you feel like you're with the right brokerage that's not out there to trade against you or be a bucket shop where they hope that you're going to lose money. So you don't want to be trading with that type of brokerage, obviously. And there's also just a lot of things that you probably don't think about when you go to open an account. So we're going to be showing you what matters most, what factors you need to consider when you're opening an account. Everybody's going to be different. Some traders might not care so much about the spread, where others it's very important that they have extremely tight spreads during certain times of the day. We're also going to look at your account type that you should be opening. Again, that is going to be based on a few of these questions you're going to ask yourself. And the size of the account that you open is also important. Just because they have a minimum, of $1,000 or $100 doesn't mean that's going to work for you. And I'll explain how that works here in a minute. And then we're going to talk about the brokerage the brokers that our members have traded with. We have a beta team that we put together, and a feedback webinar that we hold each week. And we learn all kinds of things from them, including brokerages that they're trading successfully with. So that's the best way to determine where to go, is from your peers that are trading, that have got trading accounts at multiple brokerages, and as well as the accounts we've traded with our robots and manual systems. Okay, so that's kind of what we're going to cover today. Let me bring up our blog page in case you guys didn't get a chance to look this over before the webinar. It was kind of short notice again today, but here is the blog, TradeWestForex.com/blog. That's where each of these posts go. That's where you'll find the link to the webinar. This will also give you the link to watch the replay. We do record all of these, and we post them here on this link, TradeWestForex.com/webinar/weekly. You can just find that on the blog, and each replay is posted here. So you can see last week's we talked about true support and resistance. You can just click right there and watch that replay. Okay, and so then here, like we say, you get a little summary of what we talk about and what we're going to talk about here today. Okay, so let's go ahead and dive into this here. What type of trading will you be doing? This is one of the very first questions you have to ask. And if this is important, because if you're going to be, for example, a swing trader, it might not matter to you, it might not be such a big deal to you, to get fast execution or really extremely tight spreads. You might be more concerned about, maybe the level of liquidity that your broker has, or being able to see market depth, just other tools and features and things about the brokerage. Maybe, if they're regulated, the leverage they offer, the minimum trading sizes. Those type of things are probably going to matter to a swing trader more than a scalper trader or a news trader. And so you've got to find that out first. The other thing here is if you're planning on hedging, there currently are even some U.S. brokerages that allow hedging. They've found ways around it. Same with first in, first out rules, and so you can get around that still, even with U.S. brokerages or there's brokerages that are offshore that offer it as well. And the other thing that kind of goes with that is leverage. Now, leverage to many traders, I'm going to bring up a little notepad here. Okay, leverage, many traders that they think they need 200, 500 to 1 leverage when many times they don't. And let's see if if this tool lets me draw. Okay, looks like it's working for us. Okay, so let's just start off typing in here. Let me just go ahead and show you an example here. Let's say you open an account with $1,000, and let's just say you only have 50 to 1 leverage. Let's see how you can determine if this is enough, if this is going to work for you. Okay, one thing you have to find out is what is your broker's minimum lot size. If it's one mini lot, 0.1 lots, if it's a mini, that might not work for you. Some traders it might, some traders it not. So let me explain how this works. If you're going to take a mini lot, you have to figure out how much of margin you have and how much of that is going to be used, and then how much you need to carry the trade. So I'm not going to give you a big lesson on this. I'm just going to do it and show you how it kind of works out here. So at 50 to 1 leverage, that gives us 50,000 in margin. And a mini lot is going to be 10,000 in margin on U.S. based pairs. Okay. So if you've used 10,000, that's the minimum you can trade with it, we're saying in this case, you've basically used up a fifth of your margin just to hold the position on one single trade. What happens if you want to take a few trades? Well, if you take 2 or 3 trades, say you have 3 trades open, you've used 30,000 of your margin. Okay, now the problem is you still need margin available to maintain the position as it moves against you. And this is really getting close. It's really getting close here, but if you're in there just using small stops, this might be fine. And that's where I say some traders are going to be okay with this setup, but you have to analyze, look over your situation, your trading style, and see if it's going to work. Here you've got 20,000 in margin available. Every time the market moves against you a pip, it's basically $50 in margin. So you have to just go through and look at that. Like I say, small stops probably are going to do okay here. But what happens if you're a trader that's going to take, watch 10 or 15 pairs? Well, now, what if you have more than 5 trades you want to take at once? You're out of margin. You can only take 5 before, you can't even take 5 because then you've used up all your margin. So this is the first starting point for determining what brokerages you're going to be looking at. You need to know what to be looking for. So find out if you're going to need more than 50 to 1 leverage. Another thing here is you can avoid this by, let's say your broker can trade down to a micro. If you can trade a micro, then everything changes, right? Now you've opened it up quite a bit. But one more thing that kind of goes with this is you might not want to trade a micro or a mini on $1,000. That might be too aggressive for your taste. Let's say you're going to have 10 trades at 1 micro. That's basically added up to a mini lot. Okay, so that's going to be $1 per pip. Well, if you're swing trading, you might be risking 200 or 300 pips on these trades. That's way too much. If those trades all lost or went into a drawdown, you're eating into your account very aggressively. 20 or 30%. I'm going to put a note here. 2 to 300 pip stops, which is normal and okay on swing trades. But in this case, it would not be wise to try to set this up with these parameters with this broker, unless you're okay with the 20 to 30% drawdown from these trades. Okay, so I don't want to bore you guys too much with all these numbers and things. You just have to understand how your trading is really, how it all really works with broker parameters such as leverage and broker's minimum lot size. Okay. Now, I'm going to be showing you some brokerages here a little bit later that you can trade with $100 and even up to 200 or 300 to 1 leverage and with a micro lot minimum. Now, see, in this case, you might not worry so much about 20 or 30% drawdown because it's a small balance, but even the $1,000 maybe. But you just have to make sure, if you're going to have a grid type system or a scalping system, and you're going to be taking a whole ton of trades, still you need to make sure that all those parameters are going to work out. Okay, now that we've got that figured out, you can see here the next thing is I guess we've kind of answered that one too, is how much money you're planning on trading with. That one is, again, just kind of matches with your broker's leverage that you're going to need, that you're going to be supplied with, and the minimum lot size. So we've kind of covered that all together. Okay, so the next thing here is things like spread. Okay, now there's brokerages out there that have like fixed 3-pip fixed spreads or 2-pip fixed spreads. They'll say like on the euro dollar, they'll have these tight spreads on the major pairs. But you might not trade those pairs. And if you're trading something like our robot Trade Hero, we are trading the euro pound and the pound franc. Okay, what you need to find out what are the spreads on those pairs, and also not just the average spread. What is the spread during the time that we trade? We're trading from 1 to 8 p.m. Eastern, so we need to find out what is the spread going to be during that time. Sure, the broker might have some amazing spreads and have some fixed spreads during the active times, but what happens during these times? You need to find that out. And there's some different sources I can show you to learn this. Let me see if I can bring up a page here real quick. I think it's actually on my FX book. Let's go ahead and take a look here. Okay, I think if we go into, let's see here. Market volatility, it might be in there, or liquidity. Let me just click it here. I should have probably checked this before, but I know I've seen, okay, this is something new. That's different. But I know they have a section in here. It might be actually MT4I. We'll go double check that one too. But I know that you can see the spreads at different times of the day. Let's try that. Let me go to MT4I. I think they're the ones I've seen it at. Okay. Yep, here it is. Okay, so if you go to mt4i.com and click on spreads, here you can see the spreads for many different brokerages in the different time zones. So they've got the overall, the Tokyo session, the London, and the New York. So if you're looking at our robot or any robots that really trade around the Asian and end of New York, you'd want to look here in this section and go through and see what kind of spreads. They're showing you the minimums, the maximums, and the average. So that's one of your first things. Now, I want to make a little disclaimer here about this, though. There are some brokerages out there that will sit here and show you these amazing spreads, but the problem with them is a lot of these don't have very much liquidity at those spreads. Okay, so let me bring back up the notepad and let me show you how this kind of works. Let's say you've got like some of these brokerages here showing you, 0.2 pip spread. Now, of course, this is on the euro. Let's change this to euro pound. Okay, 0.6. You can see that the best brokerage spread is at FX Open on their ECN. This is on the live feed is 0.6. Now, I know I've traded with FX Open in the past, and their spreads have been pretty good. They're basically a white label of Dukascopy, which has lots of liquidity. But let me just give you an example. I don't know about some of these other brokerages, but let me show you something that they're not telling you. Let's say you have the spread here. You have the bid, and then you have the ask. we could even just show you this on Dukascopy, but let's say this is sitting at 1.32 and this one's over here at 1.32. Let's put a tenth of a pip or a 6/10 of a pip in there like they're showing us here. Okay, so there's your 6/10 of a pip spread. What you really need to know is how much liquidity is available at this price. What if there's only a micro lot that you can take at that level? And then let's say the next level here you've got, it goes down, of course, 31.999. Maybe there's only another micro there. Well, now if you go to try to place a trade with more than a micro or 2 micros, you're not getting 6/10. Now you're paying 7 and then 8, and, and so on as you go down. This, if you guys came to the recent webinar about liquidity, where we talked about market depth, then this should make sense. But you look at them. If you look at a market depth chart here, you can see. Oops, looks like it might be hiding from us. Anyways, looks like it's not showing up in here right now, but you've seen the market depth before, and as you can see even on the price right here, this spread is very good, 7/10 of a pip. And on top of that, I can trade 1,000,000 in currency on either side. That's basically 10 standard lots. I can trade 10 standard lots on either side. That's very good liquidity and good spreads. So be careful. The point here is to be careful of looking at some of these that say they've got extremely tight spreads, and see if you can find out the market depth or see how much liquidity is really available at that price. So just a little heads up on that. Okay, it looks like somebody posted a link here that they also have it on MyFX book. We can bring up that one too if we'd like here. Looks like it's at myfxbook.com/forex-broker-spreads. So I'll bring that page up here too. Okay, so there you go. There's another source for the spreads. Now this one doesn't look like you can filter it down by time zone. So the other one's kind of nice because you can look at the different time or the different sessions, trading sessions, and see what they look like. Okay, so anyways, that's the next thing you need to consider when you go to find your brokerage you're going to trade with. Find the ones that are going to have good spreads with enough liquidity for you to get filled at those spreads, and then, and again, this is only if you're a trader that's scalping or day trading. This stuff is more important to you. If you're going to pretty much stay on the daily charts and 4-hour charts, the spread is still important, but I mean you don't want a 10 pip spread or something crazy, and terrible execution. But it's not going to affect you as much, right? Okay, think about it this way: if you go out and trade on a daily chart, let's just bring up a daily chart real quick here. Okay. Okay, so if you're here on a daily chart, I'm going to show you how the spread doesn't matter all that much, because if let's say you're down here, let's say you're over here buying, right? If you bought in here, and even if you didn't hold that trade very long, if you just held it a day or two or got out somewhere in here, you're looking at 156 pips. So if you had to pay 3 pips on the spread versus 1 pip, I mean, that's a very tiny, very small percentage of the profits in your trade. Okay, I mean, if we were to take and draw what 2 pips looks like on here, I could just put what a 2 pip spread difference is. You can see how it's just a tiny, tiny amount. Okay, I'm going to try to get it right here because I'm going to do a little demonstration. So I'm just going to take that price and I'm going to add 2 pips to it. Okay, so there's exactly 2 pips. So what I'm showing you here is a difference between a 3 pip spread and a 1 pip. So if you're on the daily charts, you can see that 2 pip difference is nothing. It doesn't really have much effect on the market or on your trade here. Same with the trade execution. You're probably not going to have an extremely fast move that you need to get filled in on a swing trade unless you're trading during news or something. Then you're going to want fast execution too. But let me just drill down to a 5 or a 1 minute chart, and you're going to see how that opens up. Pretty straightforward, but it just explains the point here. Oops. Let me just draw it again. No, it's too far back in the past. Okay, if I go draw 2 pips on this chart, you're going to see that it can affect your trade quite a bit. You're looking at right there to, somewhere right in there. So now, let's say you're on here, same thing. Let's say you took a trade over here, somewhere in there, and you exit up here. Maybe you just try to scalp a little bit out of the market. Well, look how big that chunk now is that it took out of your trade. It took like a third or so of your trade. Just a huge difference. I probably didn't need to go into that much detail about this, but it's something that I know a lot of traders that are on daily charts are wasting too much time, trying to get with a certain brokerage that does all that. Has all the fast execution and the perfect spreads when it's not that big of a deal. Like I say, get some decent spreads, but you don't have to, miss out on other things, such as, maybe you want to be with a U.S.-based brokerage that's regulated, that has, a huge amount of liquidity behind them. You know that you can count on them and rely on them with having your money with them, and that it's backed, all that kind of stuff. Segregated funds. So yeah, that stuff might be more important to you if you're going to have a large trading account for swing trading. Okay, so spread. Hopefully you can see the importance of that, especially with robots that are scalping. Okay, we've looked at different factors. While we have my FX book up here, let me go back there. Let me just show you one more way of confirming why spread's important for certain systems. What we can do is we can go look at any system on here. Let's just go look at the most popular. Okay, let's just go look at this system. Okay, this is a system that has, if you come down here and look at some of their parameters, they have an expectancy that is very small here. You've got to have a very good spread, okay? Expectancy, as it tells you here, is what you can expect to make or lose on every trade. So if this is sitting around only a couple pips, 3.4 pips, the idea here is, we don't know what this broker's spread was at the time, but let's just say, it was a pip, and the broker you're trading with is 3 pips. That would take more than half of the profits away from you. This would no longer look like it does. You would have half as much profits and twice as many losses most likely, just because you have 2 more pips on your spread. So that's something you need to be looking at, is what's your expectancy of your trade. This one's very low because it's a scalping type system. If you're looking at trading systems that are on those daily charts like I was showing you, you'll see that it'll be different. We could try to see if we could spot some of those. I don't know if they've got an advanced filter, but if we were to find some of these that have higher expectancy, then those are the systems, like I say, that you don't have to worry about the spread so much. Okay, so we've hammered that one out. Let's see. We'll talk a little bit here now about ECNs and STP. All that stuff has to do with getting fast execution on your trades. So we're going to look at that as we go through each of these brokerages. This is a couple of the brokerages that we use and our members have used. One of them is FinFX. Okay, these guys have very good spread, robot trading in the Asian session or pretty much any time of the day. They've been great for scalping. They have very fast execution. So news trading's worked very well. And so they've been a pretty much universal brokerage to go with, and that's why we've liked them a lot. And they do accept U.S. clients, even though they're offering hedging and first in, first out, and higher leverage. Okay, so at this time they still do offer that. And they do have a minimum account. With a micro account you can start with $100, which is nice. You know, you could just, even if you have another account or a brokerage you're going to go with, it's still worth just opening a $100 account and running a robot there, or you're trading there side by side is a good comparison. Okay, so I'm going to click this link here. Like I say, you can just find these links on the blog on this post. But if you click that link, it takes you right to the trading accounts page where you can sign up for a demo, try out their demo, and you can see here's the micro account, and they give you a little information about it. You can fund your account in other currencies if you'd like, and there's your minimum deposit, $100. Okay, and it tells you their spreads here, which we could go use these other tools to see what their spreads have looked like, but they're saying they are starting around 1.6 pips on this account. They do get smaller if you go to the ECN, but in that case they would add the commission. Okay, so they're basically just factoring that into the spread here on the micro. It says that your minimum trading size is going to be 0.01 lots. So if you remember what we just talked about here earlier, needing to know what your minimum increment is going to be and starting size. Okay, this is a starting size of 0.01, and then your increments are 0.01. So that gives you lots of flexibility, even down to a $100 account. Okay, but if you step up here to the ECN, you'll see now your lot size minimum starts at a mini lot. And then you can still increment at 0.01, but you have to establish your initial trade with a full mini lot, which that might be too aggressive on $1,000 here with one mini lot for your system. Okay, and if you need help looking over this, you know, just get in touch with our support or contact us. We can help you find out which account type is best for your situation. You know, sometimes you might have $5 grand and you still just put it in a micro because of your requirements needing that mini lot minimum, or you know, the different leverage. You can see the micro, they do offer up to 200, and in fact you can contact them and they'll give you 300, whereas the ECN, they're only going to do up to 100. Okay, now both of these accounts function as an ECN. You're getting, you know, very fast trade execution, very good, you know, tight spreads, and they even have one more account type down here is their ECN Pro. And so what the difference is here is they have servers that are located right next to the liquidity providers. So you get even faster trade execution, and this does require a $10,000 deposit in that case, though, and they do give you a little bit lower commissions. Okay, so this brokerage, like I say, is pretty much universal to any account situation. They've got plenty of leverage and the right minimums. One thing they don't have is nano accounts. If you really don't have more than, you know, $100 or $1,000, but you need certain requirements, you know, you might need a nano where you can trade less than a micro lot, where you can trade pennies per pip instead of 10 cents or $1. Kenny says you can get 200 to 1 on FinFX ECN non-pro if you request. Okay, so there's a little note for you from Kenny. If you request it, they'll give you 200 to 1, even on the pro account. I know on the or he's saying on the ECN, not the pro. Sorry about that. Yeah, on the ECN account here, where they say 100, you can get 200 if you request it. And like I said, on the micro here, you can get 300 if you request it. Just takes a simple email, and they'll usually do it for you. Okay, you can see over here they say they do have hedging allowed. The first out rule does not affect them. Scalping, they're perfectly fine with scalping, and robots. So you have really good conditions, no restrictions. They welcome it. Where there are some brokerages out there that don't like it. They'll just purposely not fill your orders quickly, and they want you to leave them. They're not making any money off of those type of traders. And as it says here, you've got the true ECN direct market access DMA environment. You're seeing raw spreads. Sometimes a spread will be 0 pips. And again, like I've been saying here, they have no conflict of interest with their clients because they are making money by adding maybe a little bit on the spread here for the micros and then raw spreads on the ECN, but just taking a commission off the trade. Okay, now these guys are, they've got this AAA credit rating, so they're a very well-established broker. They've got a ton of clients, a lot of funds involved, so they're pretty credible, and we've been trading with them for a couple of years now. Okay, so let's look at the next one. Let's go back to the blog here, and we'll look at Pepperstone. Now, I haven't personally traded with them because they don't allow U.S. clients. But those that have, those of our members that have used them said that they've had great trade execution and very competitive spreads. So if we click here, you'll see they have a couple different account types. They give you some information. They do have up to 400 to 1 leverage, and they also have raw ECN spreads. They tell you here a little bit about your funds get held with a AA rated bank. There's lots of information. I won't go over all of this. You can see it when you go to these pages. But you can learn about their account types, learn about their different account options. If we scroll down here, I think that is at the bottom. Oh, maybe not. They'll do a comparison on, they have a few different account types, just like where with FinFX you have the micro, the pro, the ECN. Here they are, trading accounts. You've got their edge technology, they talk about that, but then you've got the standard and the razor account. So if you click here on the standard, it tells you about the spreads. It's an STP situation, straight through processing. They're not going to say, I don't think they're going to tell us the commission here. Okay, here it is for the razor account. They're looking at a euro-dollar spread of 0.1 to 0.8. There's your minimum size, 0.01 lots. You can do up to 100 lots on a razor account, 400 to 1 leverage. Their commission is $3.50. This is in Australia currency, Australia dollars, and it's $3.50 per 100K traded, which is basically 7/10 of a pip round turn. So every trade takes about 7/10. That's where most brokerages are at. So it's pretty much the same as FinFX on there. We've pretty much seen these brokerages very similar, FinFX and Pepperstone, just that FinFX accepts U.S. clients. Okay, let's see. Let me go to, let's see here. Let me go look at this. One more thing here. Looks like Kenny was sending me something about leverage. Yep, he just sent me a little screenshot here. You can see where the support guys have come on and said he asked if it's possible to get more than 100 to 1. And on ECN accounts, they said, yeah, you can get 200 by request, and on micros, 300 to 1. So there's a little screenshot from Kenny. Okay. So let's look at our last one here. This is for those of you that want a U.S.-based brokerage. You want a regulated broker. This is MB Trading. A lot of our members have suggested them. I used to trade with them. It's been a while, though, so they've made quite a few changes. They have this new thing called Pay for Limits. So let's go to their website here, and I'll show you. They've got a nice comparison of their EXN account versus their pay for limits. Okay, so what they have here is something really kind of smart that I think they did here was they actually will pay you if you put limit orders in to take trades. And the reason they're doing that is because they are able to offer centralized liquidity that way. It just helps everybody get better spreads and better execution when it's in-house liquidity. So what that means is that when you put an order in, instead of just click and buy, it's just like over here on Dukascopy. Instead of just hit and buy right now, I could place a bid over here, and that will offer liquidity to sellers and actually put an order in to buy for me. Okay, so if I put in a better price here for the market. I'm offering a better price to the market, which gives the spread, gives the market tighter spreads. Looks like I'm not logged in to do it right now. But anyway, you guys have probably seen me do this before. I can tighten the spreads by offering a limit order on the market. And so that's why they like that, and they are incentivizing it. If you do that, they're going to pay you, let's see, I think, pay for limits pound, okay, there it is, round trip limit orders. We pay $1 per 100K, so $1 per standard lot. They'll actually pay you to put a limit order in order to have better execution and spreads offered on their platform. Okay, or if you want to have no commissions on your trading, on your market orders, and you want to do market orders, then you'd go with this plan here, where you still have tight spreads, but they do have a markup that they take to make money on their end. They have a minimum trading lot size is 0.1 on these accounts. Now I'm not sure, I haven't checked with them to see if they offer micros or nano accounts. If anybody trades, if one of you in here trades with them, let me know. Okay, so those are the couple brokerages that we've looked at that kind of have pretty much universally worked for all the things we've kind of talked about today. But there are going to be some of you with those specific situations. And hopefully what I've showed you here today about, looking at your type of trades that you're taking to see if it really matters with spread or what your broker's minimum should be. There's certain systems out there that they might take 10 or 15 trades, and you need to make sure that you're not trading, for example, a $1,000 account with a mini lot minimum here, because you're not going to be able to get filled on that many trades with your leverage and those minimum requirements. So those are some of the things that a lot of traders overlook, and hopefully that'll give you a better idea of what you need to be looking out for when you go to open an account. And we've given you a couple brokerages that you should open some accounts with. You can try them out. Even if you already have accounts, just open them with the minimums and give them a try. And that way you can have a good comparison and make a decision rather than just the demo. The demo is good to start with, but I would still try a live account before you make a full decision to fund a large account with them. Okay, so that pretty much concludes what we wanted to cover. I'm going to answer some questions now about if you guys have any questions about these brokerages we've covered, or any of the technical things we've covered about determining what you need to be looking for when you go to these sites. So Will says, so FinFX and Pepperstone, yes, and MB Trading if you're looking for, I know there's some of you that just do not want to go outside of the U.S. And if that's the case for some reason, then we have a brokerage here that some of our members have been using successfully with robots and scalping and any kind of trading really. And these guys are in the U.S., they're regulated, and they've been around quite a long time. So yeah, I guess I didn't really talk about that too much, ECN versus market makers. So each one of these brokerages, all three of these really have an ECN STP set up. Most of the brokerages out there that are still around, it seems that are popular, have pretty much merged to that. It's become a really popular thing to have an ECN set up. It's most traders like me have gone out there and exploited the problems with the others, with market makers, and I can talk about it a little bit here for you. Is that market makers, what they are doing is what that term comes from is they're actually offering the liquidity in-house. They're making the market for you. Very few of those type of brokers are processing your order to the real market. So what they're doing is they're trying to match your order up with other traders in-house, or they don't even have to do that. They can just say they placed your order and they will take the other side of it and not even push it to the market at all. And so obviously if they're doing that, they don't want you to make money because they're on the opposite side of your trade. So if you make money, they lose. So that's why they might pull little tricks like if the spread if the market's a pip away from your stop, they might just widen the spread temporarily or take you out of the trade, even though the price on the real market didn't even move to your stop, because that will make sure they get out with a profit and you lose. So those brokerages are those market makers that don't have STP. The orders are going through Dilling's desks that make those decisions. And that results in a much slower trade execution, usually worse spreads, and obviously a conflict of interest with you. So ECN is the Electronic Communication Network. It's a central place where liquidity providers and ECN brokerages tie into, so they all see the same thing. They all see the same price feed, the same liquidity sources. Now, the thing is here, the reason why some brokerages have wider spread than others is there's a couple different things here going on. One of the things is it's how many liquidity agreements they have. There's liquidity sources such as Hotspot FX, Citibank, Dresdner Bank, SWFX, which is from Dukascopy. Those are all liquidity sources, and it requires the brokerage to have a large account, a segregated account with them in order to process their trades through. It's kind of how it works, if that makes any sense. It basically, when you place a trade, the broker has to place the trade for you. If it's STP, they have to place the trade for you on their account with that liquidity source. And by doing that, these guys have to have these large liquidity sources, and that's why some brokerages just don't have the ability to do that. They don't have millions and millions of dollars to fund it and do it, where others, have tons of those relationships, and they can offer more competitive spreads and pricing. Someone says, how many lots can you trade before the brokers put you on manual or simply close your account? Well, right there you're referring to a market maker. These three brokerages I've showed you will never do that. They don't have you on radar. What you're looking at is probably something they call an A book, B book. And that's where they have maybe like the A book is all their traders making money, B book is those losing. And obviously what they do is they do STP on the A book and trade against those guys in the B book. So you don't want to be with a brokerage like that. You don't want to have to worry about wondering when they're going to move your account like you're saying here. So if you trade with an STP, ECN, or one of these three we've shown you, you don't have to worry about that. They don't care if you lose money or make money. They make money from a commission off each transaction that you make with your trades. So, in fact, most of these brokerages want you to succeed. That's why a lot of these, out there will give you tools. They'll provide different tools because they want you to succeed. I've seen, especially like Dukascopy, they have so much transparency and they give you lots of free tools because if you don't make money, they don't make money. They need you trading and taking trades. So those are the type of brokerages you want to be trading with. Just like it says here, they don't have a conflict of interest with you. They want you to make money. Any other questions before we wrap this one up? Will, are you talking about alerts for Momentics to alert you on your phone or email? Yeah, we can show you how to set that up if you just contact us on the support or on our live chat. We do have the ability to set that up in the platform so you can receive those alerts. Someone's asking about Oanda. I haven't looked at them for a long time, but we could go to their website here really quick. I know that at one point I was looking into them, and they had a statistic comparing different brokerages and found that most clients that were successful between the brokerages were actually trading with Oanda. But other than that, I haven't gone in to see if they've got a true STP ECN environment. I know their spreads have been good, but I personally can't really give you a lot of information about this particular brokerage. we could probably come in here and dig into them and try to see. Their spreads are a little wider than normal, I would say. I mean, in comparison to some of the ones we've been talking about. So they're probably making more money off the spread than other brokerages, which is going to affect you quite a bit if you match one of those styles of traders we've been talking about. Okay, so let's see. I'm outside the U.S. I'm in the U.K. What about here? We pretty much, the main brokerage we've recommended has been FinFX because it's pretty much matched most traders' requirements, and that's where I personally trade many accounts, and we've had no problems with them. I've had trades where I've been in trades where my stop was 1/10 of a pip away, and the market still didn't take me out. They didn't play around with my orders. I actually had the trade come back into profit. So I just had a lot of experience with them, and I know that they're a legitimate brokerage. So. Will says he's going to set an account up with FinFX. So, yeah, I would say that's what you do. Even if you just start with the micro, start with the minimum, give it a shot, and then you can always fund your account with more later. It's always a good idea to get your feet wet first. Are you talking about Gain Capital, Bill? They've been around a long time. I know they've worked with Forex.com. But, I worked with them a long time ago. I haven't recently because a long time ago again, like you're saying here, they were a market maker. I just pretty much stay away from many of those. It might not be as big of a deal like we were saying earlier if you're swing trading, where they're less likely to be manipulating your stops when they're hundreds of pips away and things like that. Someone says here, and they had a 30-pip spread on this significant news like non-farm payroll. So that's not always there. I mean, it's not them whiting it maybe. It could just be they don't have a lot of liquidity during news time. So if you're looking to news trade, that's the kind of things you need to look at, is how much liquidity they have during news. Most of the time, though, if the spreads are widening, that could be perfectly normal. What might be more alarming is if they're not widening, because then you're probably trading with a non-ECN brokerage that's just telling you they can fill you, but they maybe really can't. Or they can, and then they are going to hope you're going to lose. Okay. Let's see. They require passport for ID. Forex.com. So yeah, those guys, like I say, I think they're still pretty much doing things the way they've always done. So I haven't really gone back to them and tested them out much. I usually suggest most traders to go with the micro, because that just gives you the ability to trade with the micro lots. Even if you have a large account as a micro, that's fine. You might even just open one of each and kind of see what you like better. It's not a bad thing to have multiple trading accounts. Well, currently there is no issue with FinFX and U.S. clients. So they currently don't have a problem with that. I don't know what their agreements are, but right now it's still an option for U.S. clients, which is nice. Okay, so just go to TradeWestForex.com/blog, and that's where you'll find this post we just put on, and that's where you can find these links. But I think we've answered some good questions here. We're probably going to wrap this up. You can review this recording by, again, you can go to the blog and find this link, but it's just going to be right there, TradeWestForex.com/webinar/weekly. I'll also just post that in the chat here for you guys. And we'll post that replay later today so you can review or come back to this at a later time, or if you came in late, this is how you'll find it. It'll be right here at the bottom, just like last week's. This is where you can also go watch previous weeks that you might have missed. We've had quite a few of these webinars, and you might want to just go in and review some of those. There's been a lot of valuable content, I think, in these. It's not your typical, basic information. We have some stuff that's, basic to easy to understand, but it's unique things that I've learned over the years of trading. I've been trading for almost a decade now. Okay. Last question here, and I'm going to close things up, is what is hedging? Hedging is where you simultaneously buy and sell a currency. So what a lot of traders will do, is they'll buy, the market goes against them, they'll sell, temporarily make a profit, and then let the market come back up and profit on their buy trade too. Okay? Yeah, no problem. I hope you guys, everybody learned a lot, and hopefully you guys can go open some of these accounts, give them a shot. And like I say, this is a piece of your trading that's very important. You could have a very good system that fails you. I've seen it with our robot even. We have a great robot, Trade Hero. You're probably going to hear more about it later. But that robot has been trading for a year successfully. But there's some brokerages it's lost money at. Why is that? It's not the system, obviously. It's the brokerage. So get the right brokerage first, and make sure that's not going to be your problem, and you'll have a far better chance of being successful in this business. So thanks everybody for coming to this webinar. We'll get this replay up like I said, and I hope everybody has a great weekend. We'll talk with you next week.